Welcome to the deep dive.
Great to be here.
Today we're tackling a really interesting period you flagged for us, that economic whirlwind that hit the trucking industry.
Right, between 2018 and 2019.
Exactly. Your sources paint this vivid picture, a rapid boom, then a pretty significant slowdown.
Yeah, real boom and bust cycle compressed into a short time.
And what we want to do here is really dig into that volatility. What are the core lessons we can pull out?
Lessons that can help us understand the economic landscape today, right?
Yes, exactly. No matter what sector you're operating in.
Absolutely. It's a fascinating case study. You see this powerful surge in 2018 give way to a much tougher environment in 2019.
And trucking is such a good indicator, isn't it?
It really is. It acts as a bellwether for the broader economy. So by looking closely, we can uncover some, well, fundamental principles
About growth, risk.
and adaptation, especially when things feel uncertain.
Okay, so let's get right into that rapid growth of 2018 then. The data you shared, it highlights, 3.1% economic expansion?
Yeah, the quickest we'd seen in over a decade.
Wow. So for the trucking industry, that must have felt like a gold rush.
Oh, definitely.
What did that kind of growth actually translate to on the ground?
Well, it created just an enormous appetite for freight,
It makes sense.
with more consumer spending,
Yeah.
more business investment. Suddenly, there was just a lot more stuff needing to be moved.
Right.
And the natural reaction in trucking was, try and meet that demand head on.
And the sources describe a pretty significant response. I mean, big carriers were hiring like mad.
Actively recruiting drivers, yeah. And smaller operators. They were seeing much better rates, more frequent loads.
So everyone's trying to grab a piece of the action.
There was a real push to expand fleet sizes, ordering new equipment.
That's like capitalizing on the moment.
That's right. A definite sense of urgency to capture that increased volume.
But
Huh.
there's always a but, isn't there?
Well, yeah, as your material also points out, this kind of rapid expansion, it comes with its own set of challenges.
Like the driver shortage getting worse.
Exactly. That became even more pronounced. And just the sheer speed of growth put a strain on, well, everything. Operational capacity, resources,
Right.
and this grab for market share mentality. While you get it in a boom,
Yeah, understand.
it often overlooks the sort of longer-term costs. Training inefficiencies, maybe future layoffs if things slow down.
Things that can damage reputation and the bottom line later.
Precisely. Those hidden costs of just growing too fast.
That's a really good point. So for people listening, when you see those high growth periods in your own field, what should you keep in mind to avoid, overextending?
Well, the sources we looked at really emphasize watching key economic indicators closely.
Consumer confidence.
Yeah, consumer confidence, inventory levels all through the supply chain. Those give you crucial signals.
About whether the growth is sustainable.
Exactly. And a really practical strategy that came up is building in operational flexibility.
How so?
Instead of making huge permanent investments, say, in equipment or people right at the peak, maybe explore options like leasing.
Ah, okay.
That lets you scale up for the demand without being locked into high fixed costs if things, cool down unexpectedly.
That makes a lot of sense, like renting extra capacity instead of buying it all.
Kind of, yeah. Gives you that buffer.
Okay, now let's fast forward to 2019. The picture changes quite dramatically.
It really does.
What were the main factors driving that slowdown for trucking?
Well, there were several things going on. You had a general cooling of economic activity overall,
Right.
but the sources you provided also really point to the impact of rising trade tensions.
Specifically with China,
Yes, that created a lot of uncertainty for businesses,
which then led to...
a reduction in manufacturing output, and consequently less freight needing to move.
Okay, so for an industry that had just geared up so aggressively,
Yeah, in 2018.
that shift must have created some serious headwinds.
Oh, absolutely. Big challenges.
What were the immediate ones they faced?
The core challenge really was that many companies found themselves over-leveraged.
They'd taken on too much debt.
Expanded fleets, taken on debt, all based on the expectation that the high demand would just keep going.
Which it didn't.
Right. So when freight volumes dropped, suddenly they had too many trucks chasing too few loads.
Ouch.
And that led to a sharp fall in what are called spot rates.
The prices for immediate shipping needs.
Exactly. And that just severely squeezed profit margins across the board.
And it sounds like the smaller carriers, they really bore the brunt of that.
They really did.
The data mentioned, over 600 company shutdowns in just the first half of 2019?
Yeah, it's a really sobering statistic.
Wipe it out.
It really underscores how critical financial resilience is. Many of these smaller operators, they just lack the capital
To
reserve
ride out the storm.
to weather that kind of significant drop in revenue. It's a stark reminder, really.
That you need to plan for the downturns, too.
Just as much as you plan to capitalize on growth, you absolutely need that financial cushion to absorb unexpected shocks.
So learning from that, what are some concrete steps businesses listening today could take to build that kind of resilience?
Well, the sources suggest a few key strategies. Diversifying your services is one.
Not putting all your eggs in one basket.
Exactly. And diversifying your client base, too, so you're not overly reliant on one sector or, one type of freight.
Makes sense. What else?
Maintaining a, let's say, conservative approach to debt management.
Don't overextend financially.
Right. And developing a flexible cost structure.
Meaning you can scale expenses down quickly if the market changes.
Precisely. That agility is key.
Now, the sources also get into some of the regulatory stuff happening behind the scenes.
Like the ELD mandate?
Yeah, the electronic locking devices.
Yeah.
How did those kinds of evolving rules impact things during this volatile period?
Well, regulations like the ELD mandate, they definitely introduced new complexities and costs.
I bet. The initial investment must have been a worry.
It was, for many carriers. But the sources also suggest that just viewing compliance as a burden, well, that overlooks potential long-term benefits.
Interesting. How could something like ELDs actually be beneficial beyond just ticking the box?
Well, for one, companies that adopted the tech proactively, they often had fewer disruptions later on.
Okay, smoother transition.
And moreover, the data these ELDs generate, they track driving hours, location, speed, all that.
Right.
That data became a really valuable asset for the more, let's say, sophisticated operators.
How are they using it?
Things like optimizing fuel efficiency through better route planning,
Finding saving.
or even improving preventative maintenance schedules based on actual usage data. That saves costs down the line, too,
So it's about looking beyond the compliance cost.
to see the potential for operational improvement. Yeah.
How can businesses, maybe in any sector, apply that thinking to regulations they face?
I think the key is not just seeing regulations as hurdles, but maybe as potential catalysts for innovation, for refining your processes. The sources kind of hint that using reg tech,
Technology specifically for regulation.
solutions to help with compliance, and really analyzing the data you collect for compliance, they can actually build trust.
With stakeholders.
Yeah, and potentially even offer a competitive advantage. Shows you're serious about safety efficiency.
Got it. Another big factor mentioned is cost. Rising, unpredictable costs.
Always a challenge in trucking.
Things like fuel, maintenance, insurance.
Yep, all squeezing margins, especially when things got tighter in 2019.
How did carriers try to manage those?
They had to become incredibly focused on operational efficiency, really laser focused,
Like what specifically?
implementing fuel-efficient driving techniques, optimizing routes constantly to cut unnecessary miles.
Using those telematics systems we mentioned?
Exactly, monitoring vehicle performance, identifying waste, even investing in lighter weight equipment to save fuel.
And driver training, too.
Oh yeah, training drivers to minimize things like excessive idling. That's a big fuel cost.
And this focus on efficiency. It's not just a reaction to bad times, is it?
No, absolutely not. The sources really underscore that today, that relentless pursuit of efficiency, it's just essential.
For survival.
Survival and competitiveness.
Yeah.
We're now seeing even more advanced tools, AI-powered route optimization,
Wow.
investment in greener tech, predictive maintenance to fix things before they break.
So these aren't optional anymore.
Increasingly vital, I'd say. Crucial for staying ahead.
Let's talk technology more broadly, too.
Yeah.
Logistics, software, GPS tracking, even early automation.
They were all becoming more prevalent then.
How did adopting that tech or not adopting it play out during these economic shifts?
Oh, there was a pretty clear trend, according to the sources.
Yeah.
Companies that proactively integrated technology.
The early adopters.
Generally, yeah. They showed greater agility, more resilience.
How so?
They could offer more reliable delivery schedules, better customer communication through real-time tracking.
Reducing waste, too.
Yeah, through optimized planning, better resource allocation. Those who were maybe hesitant to invest, they often struggled to keep pace.
What about the smaller guys, though? Was this tech only affordable for the big companies?
That's a really important question. And the landscape there has changed a lot.
Oh.
Today, many powerful logistics tools, operational tools, they're available through cloud-based platforms.
Making them more accessible.
Much more accessible, much more affordable, even for small trucking companies.
So it's leveled the playing field somewhat.
To some extent, yes. And it really highlights that having a digital-first mindset,
Mm.
it, it's not a luxury anymore.
It's fundamental.
Right. For long-term viability, whatever your size.
Okay, let's shift gears a bit. Let's talk about the customers.
The demand side.
The sources highlight how customer expectations were changing fast, especially with e-commerce exploding.
Oh, yeah. That was like a tidal wave hitting the industry.
How did that wave of online shopping really impact trucking?
It created just this unprecedented demand for faster, more frequent delivery.
Because consumers got used to it.
Exactly. You click, you expect it quickly, reliably. That put immense pressure on trucking companies to adapt their old models.
So how did the industry respond to that need for speed and convenience?
We saw a definite shift towards more short-haul routes.
You're keeping things closer.
Yeah, and developing regional distribution hubs, placing them strategically near cities, near consumers.
Partnerships, too.
A rise in partnerships between truckers and e-commerce retailers, definitely. And some firms even started specializing in that critical last-mile delivery,
Right to the doorstep.
focusing on speed, flexibility, real-time communication for that final leg.
And e-commerce hasn't slowed down. It's expanding into smaller towns everywhere.
Not at all. It remains a dominant force shaping the industry.
So what's the impact now?
We're seeing things like micro-fulfillment centers popping up locally, ever more sophisticated delivery routing,
Using AI again, probably.
likely, and the absolute necessity of giving customers real-time tracking. Agility and transparency are just paramount now.
To keep those customers happy.
And keep the business, yeah.
Another customer trend you flagged was just-in-time inventory, JIT.
Right. Retailers, manufacturers relying on it more and more.
Can you explain how that affected trucking?
Sure. To cut warehousing costs and boost efficiency, businesses adopted JIT, meaning they kept very little stock on hand.
Relying on deliveries arriving exactly when needed.
Precisely. Frequent, precisely timed deliveries. That put huge pressure on truckers for on-time performance.
Because delays could mess up the whole system.
Absolutely. Cascade through the supply chain. Very costly.
So reliability and punctuality became absolutely essential.
Went from important to, essential. A critical differentiator for getting and keeping contracts.
So what did carriers have to do to meet those tough JIT demands?
Well, real-time tracking became indispensable. Everyone needed visibility.
Accurate ETAs.
Accurate estimated times of arrival became a key metric. And just overall route reliability, minimizing disruption risk, that was paramount.
Any slip-up was bad news.
Very costly for their clients. Yeah.
And JIT is still widely used, right?
It is. And those lessons from back then, still highly relevant.
Precision matters.
More than ever. Investing in what the sources call logistics intelligence.
Using data and tech again.
Yeah, to optimize your network, predict potential hiccups. That helps avoid those costly delays. And it builds crucial trust with clients.
That trust is key for long-term partnerships.
Exactly right.
Okay, finally, let's talk about how the industry itself had to adapt internally. One perennial issue is the driver shortage. How did that play out during the 2018 boom and the 2019 slowdown?
It definitely got worse during the boom. Companies were scrambling for drivers to add capacity.
Right.
Maybe it eased slightly in the slowdown just because there was less freight. But it remained a fundamental challenge. It forced companies to really rethink how they attract and keep drivers.
So what strategies actually worked? What emerged then?
Well, it was kind of a multifaceted approach based on the sources. Better pay and benefits, obviously, was key.
Table stakes, almost.
Kind of. But also a growing recognition that the whole driver experience needed improving.
Right.
Investing in newer, more comfortable trucks, fostering a culture of respect, appreciation.
They did a better job overall.
Yeah. And companies started more targeted recruitment too, trying to attract women, veterans, younger folks.
Yeah.
Groups underrepresented in the industry.
Mentorship programs, career paths.
Those also proved effective for retention, yeah. Showing drivers there's a future.
And what are the best practices now for driver relations? What really stuck?
I think it's recognizing drivers as the absolute backbone.
Valuing them.
Providing more flexibility in schedules where possible. Offering strong support networks when they're out on the road.
Feeling connected.
And just ensuring they feel valued, see a long-term path. Treating them as partners, really, not just cogs. That's essential for reducing turnover and attracting talent now.
Makes sense. We also talked about operational efficiency earlier. Were there specific internal efforts to boost that during the volatility?
Oh, absolutely.
Hmm.
That focus on optimizing routes with tech,
Mm-hmm.
using freight matching platforms to cut down on empty miles, that deadhead,
Maximizing loaded miles.
and just implementing smarter scheduling. All that became even more critical when margins were tight.
Every little bit helps.
Every saved mile, every efficiently used hour went straight to the bottom line.
And how has that efficiency drive continued? What's happening now?
Today, we're seeing even more sophisticated tools. AI optimizing routes in real time, reacting to traffic.
Wow.
Mobile apps streamlining communication between dispatch and drivers. The goal is the same, though. Minimize waste, cut costs, maximize productivity.
Through smarter, data-driven decisions.
Exactly.
Okay, let's circle back quickly to the financial side. The sources said the 2019 slowdown hit companies with high debt hardest.
Disproportionately, yeah.
What's the key financial takeaway there?
It really comes down to the critical importance of building and maintaining financial flexibility.
How do you do that?
Strategies like, well, leasing equipment instead of buying it all with jet.
You mentioned that earlier.
Diversifying your customer base. Again, so you're not relying on just a few clients. And consistently prioritizing healthy cash flow.
Cash is king, especially then.
Always, but especially in uncertain times, true resilience, it comes from planning.
Not just luck.
Not just hoping for the best, yeah. Prudent financial planning.
So bringing it all together, it really sounds like that 2018-2019 roller coaster for trucking was a massive real-world stress test.
It really was. A powerful one.
It exposed strengths, like how quickly they could scale up.
But also vulnerabilities. Reliance on spot markets, driver retention issues, sensitivity to the economy.
All laid bare.
Precisely. And what's so valuable about looking at this period is how many of those fundamental lessons still resonate.
Managing growth, preparing for downturns.
Adapting to tech changes, understanding shifting customer demands.
They apply everywhere, right?
Absolutely. Across all industries today. We're still dealing with economic uncertainty, labor shifts, rapid tech changes. These insights are incredibly timely.
Which leads us nicely to our final point for everyone listening. As you've heard about these rapid shifts, these adaptations in trucking during those 2 really dynamic years, what proactive steps can you take in your own field, your own business, to build greater resilience, better prepare for future volatility, whatever that might look like?
It's definitely worth some serious consideration.
Something to think about.